This is a speed demo of the physician practice pro forma model. You can purchase and download this model at healthcontract.com. Just check for the link in the video description. Physicians starting their own private practices can use this pro forma model to project volumes, revenues, and expenses, as well as investment and debt needed to operate a new physician practice. This is just meant to be a very quick overview. We will give you a quick look at each of the worksheet schedules in this physician practice pro forma model. First off, we have a worksheet right at the beginning that lets you set the headers, pre-populated fields, and schedule names for this workbook. If you're a serial entrepreneur, you may want to use this same model on multiple startup practices, so you can make copies of this workbook for each one of your startups. This is also where you can set productivity metrics for the whole model. Some folks like work RVUs, some folks like professional collections. How you measure productivity and calculate compensation is up to you. The investment snapshot worksheet is exactly what you would think. This is just 10 numbers that will give prospective investors an idea of the investment, returns, and basic information about the startup practice. The capital plan sources and uses of funds worksheet is a standard schedule that shows lenders and investors exactly where all the startup's money will come from, where that pre-opening investment money will go, and how much cash the business will have on day one of operations. The total sources of funds should always equal the total uses of funds. If they do not, then the investors and lenders will wonder where their money is going. The first volume and reimbursement schedule is intended to show historical statistics for medical providers in the practice. Doctors and APPs that have already been working as employees for someone else usually already know how productive they are in terms of work RVUs and professional collections. Lenders and investors will feel much better knowing that they are investing in professionals who are simply moving their practice from one organization to another. That is much more appealing to lenders and investors than a completely new startup with no prior history at all. The next volume and reimbursement schedule is forward-looking. It is a projection schedule. This is where future productivity is forecast. In this schedule, you can forecast how long it will take the medical professionals to ramp up their productivity. There may be delays related to payer credentialing. If you have non-competes or non-solicits, it may take a while and some marketing dollars to build back the portion of your patient base that you lose when you move from one organization to another. These things will affect how long it takes professionals to ramp up to full productivity. I want to skip ahead one worksheet to the staffing plan. The staffing plan lets you plan out for the number of full-time and part-time professionals you have in each role. That includes physician specialists and APPs, as well as support staff like medical assistants and receptionists, schedulers, billing folks, and other office staff. You can increase or decrease the number of FTEs in each role and set standard salaries here that will flow through into the projected expense worksheet. The projected expense worksheet is exactly what you would expect it to be. This worksheet rolls up staff and benefit expenses that come from the detailed staffing plan worksheet. This worksheet also details building and lease expenses, professional fees like accounting and legal, malpractice insurance premiums, and EHR license fees, among other things. The profit and loss income statement is one of the 3 financial statements that lenders and investors want to see. This rolls up all the info from the volume and reimbursement worksheet, the staffing plan, and the projected expenses. The cash flow statement is another one of the 3 financial statements that lenders and investors want to see. This schedule is used in accrual accounting to tie together the other 2 financial statements. The balance sheet is the third and final of the 3 standard financial statements. This worksheet shows the financial condition of the startup practice at the end of each projection period. It shows assets, liabilities, and equity accounts. If you're going to take out loans for equipment or office lease tenant improvements, there are some complex loan amortization and interest calculations that flow through this schedule automatically, so these different sections of the balance sheet will balance. If a lender or investor sees a balance sheet that does not balance, that is a big red flag that they're dealing with someone who does not know what they're doing. This capital expenditure worksheet is used to calculate depreciation for the assets purchased at startup, as well as new assets and equipment that are purchased during each projection period. When you buy an asset, like a piece of equipment or computer that will be used for more than 1 year, that expense may not hit the income statement as an expense all at once. Those expenditures may instead hit the balance sheet as a capital asset that is gradually depreciated over time. Working capital is the amount of money or cash that gets tied up in business operations. Even if you project profits on the income statement, you can still run out of cash if you don't keep track of and manage all your accrual accounts. We account for all these cash flow adjustments on a working capital worksheet like this one. Lastly, we have 2 standard loan amortization worksheets at the end. These are linked to your financial statements. So if you're projecting to take out loans, this model will put the principal and debt interest in the correct places in your financial statements. Those calculations are a little technical. It can look bad if you mess those up and your balance sheet does not balance. Fortunately, the model does all those calculations for you, so you do not have to perform them manually. You can purchase this physician practice pro forma model online at healthcontract.com. This model is made for folks who do not want to spend tens of thousands of dollars on consultants and feasibility studies. If you decide you do need help, we can send you a separate service agreement to prepare a feasibility study for your startup physician practice. We will just deduct the amount you already paid for this model from your consulting service fees.